It's a very good question. At the moment, there seems to be, beyond the fundamentals of supply and demand, some market volatility, some speculation driving this. We're expecting the oil price to stabilize and then recover somewhat towards the end of the year, but it is moving target. Our current forecasts are based on an average oil price of 70 for the entire year, and that looks like there is going to be serious downside risks to that. Well, France is in a big economic predicament. It has not had the reforms that it needs compared to countries like Spain, Portugal, even Italy, which has now adopted a serious labour market reforms and is in the process of putting out the details of it, which will then hopefully have an impact on the economy. France hasn't really produced anything equivalent, yet the economy is clearly needing something, with unemployment still on the rise despite some modest growth, and competitiveness of the economy, which shows up in weak exports, lagging behind those of its neighbors, both on the other side of the Rhine, so Germany's competitiveness, but also increasingly those on the other side, so for instance, of the Pyrenees, where Spain is really catching up. So France needs more. The laws that are going to be voted later this month, the Loi Macron, so these product market reforms, are another small step in the right direction, but clearly not enough. France needs more, and that's what all these confidence surveys, the one for today, this morning, the business confidence survey was just one example, are telling us. Companies need more reforms to become more confident in the future, invest more, and thus boost growth. For the time being, though, we don't see reforms which would be serious enough to really boost the growth potential in France. Well, Greece exiting the Eurozone would be very bad for Greece, and it would be at least very inconvenient for the rest of the Eurozone. I think technically the Eurozone is in a much better situation now than it was in 2012 to deal with the fallout from a potential Greek Euro exit. We have the ESM, the rescue fund, with 500 billion available. We have a well-oiled machinery. We know what the conditions would be to defend countries, and most importantly, the ECB doesn't just have its OMT program ready, but is currently discussing about buying sovereign bonds anyway. So I think the Eurozone could deal with this. They wouldn't need to agree on anything that a potential Greek left-wing government might be demanding, but everybody, Greece and the Eurozone, would be much, much better off if Greece were to stay and continue on the path of reform.